When your stocks are rising but suddenly go downward trend with a dead cross appear on the MACD indicator, would you choose to sell or continue holding? Most of the traders will decide to sell, but after sell the stock come with a big rebound. Why does this happen? We all know that the area below the MACD zero axis is a weak zone and a dead cross formed above the zero line is one of a selling point. However, in reality, it can also be a result of flush out others investors. How do we determine if the stock price is just undergoing a healthy collection or is a big drop? Today, we will share with you a strategy called the Dragon Return, which can help you perfectly capture a safe and stable buying point. Hi everyone, I'm Angie, who love to share stock trading tips. If you are first time watch my video, recommended you to subscribe this channel, then we will not be miss out any trading tips I share here. Today I have 3 important points to share. This method is simple and easy. First, find the key candlestick. Then is the volume to prove the new trend turning point. Then is the MACD indicator. They can differentiate the strong and weak zone. When the line above the MACD zero axis, there is the strong zone. There is only above zero axis can state as the strong stock. As every trader know, below MACD is weak zone. If there is the dead cross above the zero axis, it can be one of the selling point. But in fact, it can be flush out position. How can we differentiate this position is flush out or correction, but not the big fall? Then we should follow the stock price moving. MACD zero axis didn't break through. At this moment, the MACD line go cross again. In this scenario, the volume increase. A sustained increase in trading volume, which coincidentally validates the golden cross, is a state that drives the stock price into an upward trend. Therefore, these are the 3 core elements of it. One is called the key candlestick, which is strong bullish candlestick with high volume. Second, when the MACD forms a second golden cross above the zero axis, the trading volume below it shows that the stock price undergoes a downward corrective phase with a decrease in trading volume. Afterward, the stock price becomes bullish and the volume begins to increase. The core buying point is the point when the gold cross appears. During this interval, the candlestick trend often lies in the central position of the key candlestick. This forms a good buying point. Then we require that the point of the gold cross cannot completely leave from the key candlestick. In this strategy, key candlestick act a very important role. Now, let us go into the example. We refer into this first chart. As the stock price continues to rise, the MACD indicator needs to enter into strong zone at the beginning, which can show that the stock has entered a strong phase. This is the most important point. As for the candlestick, it refers to the strongest candlestick. This is the big volume bullish candlestick, also stated as the key candlestick. Afterward, stock price go into arch-shaped adjustment. The MACD indicator does not return to the negative side of the zero axis and vibrate in the above the zero axis. When it forms another golden cross in this state, and the candlestick is also in the central position of the candlestick, this is in the entry point. We name it Dragon Return. Now should take notes. This enter point price must near with the key candlestick. Then your enter point will be in a safe and defensive point. This method suitable small capital trader and also suitable for big capital trader. Now we look into second example. After the stock price rebound, MACD must follow below MACD zero axis to above zero axis to enter a strong zone. This is the one then only you go looking for a key candlestick. The key candlestick must to be the biggest volume with bullish candlestick. This small bearish candlestick we required it meet two criteria, which is the big volume during this trend and also biggest bullish candlestick. Only applicable to become our key candlestick. Therefore, during this trend is the highest volume but small bullish candlestick. How is the second? This is the stock price correction, must to be weaker stage. Afterward, market begin show the bullish trend. During this process, the MACD indicator clearly show that it is vibrating above the zero axis, rather than returning to the negative side of the zero axis. When it forms another golden cross, the buck signal of the dragon return appear. Therefore, in the process of confirming the key candlestick in the early stage, the volume has reference value. During the stock price pullback, this signal can be used as a buying opportunity. When the MACD indicator do not fall below zero axis, it's meaningful to observe the contraction and rise of trading volume. However, when it comes to forming a buying signal and the actual trading day when the golden cross appear, the volume increase is no meaning. Therefore, the final buy point of the pullback entry strategy requires that the buy signal remains at a level similar to the key candlestick. It cannot far away from the key candlestick. This is a core guarantee that improve the accuracy of this strategy, then followed by 2 week big rebound. According to few examples, we can notice dragon return method suitable for everyone. No matter your capital is big or small, this method is suitable for you. Then now, we make a slogan for this dragon return method. Big bullish candlestick match with big volume. Volume decrease and increase again indicator go cross is enter point. This is the summary for today. If you like my knowledge sharing, please click a like for this video, subscribe this channel, and turn on the notification bell. I'm Angie. We love to share stock market trading strategy. We see you again in the next video. Bye bye.